Cool. Hi, my name's Rob. I'm the co-founder of Arcade.XYZ. It's a NFT lending protocol. Basically, you can take out loans using NFTs as collateral. So you could kind of like it's a DeFi platform like Aave or Compound, but instead of using ERC20s, you can use NFTs. Been in the space since about 2016. I used to run a Bitcoin mine in Montana. And yeah, so this talk's mainly for flippers. If you buy NFTs and sell NFTs, and you're trying to make money on them, you're always kind of searching for some kind of source of alpha, right? So, what is alpha? You know, in finance, basically, in trading, alpha is an investment strategy that outperforms the market. In crypto, a little more generally, I think people kind of basically say alpha is insight, information, some kind of edge that you have to get into a trade early and get out of it and then make some money over the rest of the crowd there. So does that exist in NFTs? Well, yeah, it exists in every single market. There's really two different types of alpha out there. It's qualitative and quantitative. Qualitative being, text information you get from Twitter, Discord, Telegram, from influencers, shillers, insiders, DAOs, communities, groups like that. And there's more quantitative stuff too, like on-chain reputation scores, so tracking of wallets, project trends, how well project is, if the floor price is going up over time, et cetera, right? And then there's deeper analytics, and basically I'll talk a little bit about some of the pitfalls with each of these and what you can do in some combination form to generate some alpha for yourself. So like I said, what are some of the challenges with qualitative alpha, right? So track records in this space are incredibly short. NFTs haven't been around super long. For the influencers out there, if you're constantly on Twitter and you're following and have notifications on for some of these different folks, these guys don't have a ton of wins to their belt, to their track record, right? So, and there's no portfolio managers for NFTs. I mean, there's a few, but they haven't been around very long, right? So you don't have a great track record there to rely on. There's no Warren Buffetts for NFTs, right? So you don't have a great sense, qualitatively speaking, of like whether or not the information that they're telling you on Twitter is, or any of these kind of social channels out there, is actually super valuable or has any real alpha behind it, right? There's also kind of a problem with like incentives. Like if you think about someone who's promoting a project on Twitter or even at these conferences here, why are they doing that? Are they the artists themselves? That's awesome. If they're not, like, what is their incentive? Well, they probably own it. If like Bored Apes probably got in really early and they're trying to improve the standing of the collection, right? So you have to be kind of mindful of the incentives and the misalignment there with more insider type of folks there. Basically, like, why would you give out free alpha? Well, you probably have some reason to do so that benefits yourself, right? So, and the last thing there is, with any kind of like qualitative alpha things that you can get for free, you're fighting the crowds. If you are, in line with everyone else, as we're seeing the same tweet, being on the same Twitter Spaces, you're with everyone else there. You're trying to be early. You're trying not to be last, right? On the quantitative side of things, track records are still super short. So wallets, are not a great source of truth for whether or not someone's a great trader, especially with NFTs, right? You can use lots of different wallets. So your P&L, where do show me the money? Like how, where is their alpha in this space? Well, there's definitely still with influencers. Like influencers spread the culture. There are obviously, Twitter, certain people that run Twitter Spaces and have giant accounts. Like influencers spread the culture here. So, if you want to try to be trading, flipping NFTs, you really have to be part of the culture, but also following like the right people in the space. And that's just kind of, obvious. So you need to be fast. Real-time data is super helpful. Having like the ability to, watch whale wallets. So when they make trades or they're buying something, you can see something, in near real time. That gives you an edge and speed. Hedge if you can. If you're constantly buying and flipping NFTs, try to have some sort of hedge position. So whales generally, what you'll see is they'll rotate in and out of collections. 1 month art blocks is really popular. Next, it's like, some PFP project, right? And then do some combination of like deep dive analytics. So you can find, gas guzzler projects on like Etherscan. This is, mostly related to Ethereum. You can see like projects that are blowing up, via the gas guzzlers. You could use some tools out there, rarity trait type tools, to try to find NFTs that have that are underpriced relative to the rarity, to some of their more rare traits that they have. And then also just by being in this in this space, try to find the next big influencer. The person that already has 500,000 followers on Twitter, you are competing with 400,000 other people to try to like gain the alpha from them. So try to find the smaller accounts that seem to be having some decent level of win percentage there. And then so there's some tools out there. My company, we actually built one recently. We haven't announced it yet, but it's live. You can check it out. It's called Metadata.XYZ. It's a rarity tracker website. It's no pictures. I'm not going to shill it too hard. Nansen's a great one, but you can build your own stuff too. Like all of this is open source. Everything on the blockchain is available, especially Etherscans. So you can build your own stuff too. And yeah, that's about it. Thanks.